Welcome investors. My name is Jacob Becker. I'm a portfolio manager for Becker Capital. And I'm going to explain to you today how I was able to get a 42.76% return in the year 2025 by investing in an asset class that is underappreciated by Wall Street, overlooked by big fund managers, and your key to outperforming the market. What am I talking about? I'm talking about small cap stocks. Quickly, let's go over definitions here. For our purposes, we're going to define something that's small cap as anything that is under $100 billion in market cap. And that just means it's not the price of a share, it's the price of the entire company, all of the shares together, is less than $100 billion worth of value. And for large cap stocks, that's going to be 100 billion or more. So these are like your Magnificent Sevens, Disney. The companies that you maybe most recognize as the biggest companies in the world will be the large cap stocks. And that's what most people look at. What most people don't look at is the small cap stocks. And you may look online and see that these are broken down into 5 categories, typically in some circles. But this is the gist of it. And so here we're going to go over the allocation that I was using last year to generate above market returns. And these 3 segments represent cash, large cap, and small cap stocks. I am an equities only investor. So we're looking at this here was the amount of cash on average that I had. It was about 7%. And right here we had the average amount of large cap stocks in my portfolio at 19%. And here we have the amount of small cap stocks. And this was 74% for 2025. And the methodology behind something like this, and again, I'm explaining my investment style for prospective investors. Those are the people who I would hope might find me here on YouTube, or people who would be willing to invest with me at Becker Capital, or those who would like to learn something from the things that we're doing at Becker Capital. But essentially, this is very different than what you might read if you were to look at the ideal portfolio. If you were to talk to somebody on Wall Street or maybe your local CFP, it might say something to the effect of, oh, here you got to diversify. 20% of this should be large cap, 20% small cap, not more than 50% US. You need some international. And so the finance gurus who are trying to portfolio manage for you would say, what is this? 74% in small cap stocks, that's a volatile asset class. Why would you do that? And the reason is because we have underappreciated deals here in the small cap stock. Our whole goal as equity investors is to try to find the stocks that are being undervalued by the market. And when we say undervalued, we mean we are confidently able to determine that the company, based on its cash flows and assets, is worth more and will be worth more in the future than it is trading for today. And I'm going to submit to you that within this group, we find more numbers of those undervalued stocks than we will up here. And the reason why is because up here, you're competing with people who can raise a $100 billion fund, people who are on Wall Street, focus heavily on the large cap area because their funds are so big. Someone who has multiple billions of dollars to invest from very high net worth individuals or pension funds or institutions, endowments, family offices, they're going to be looking at bigger things because in order to move the needle for them, they've got to turn their $100 billion portfolio or their $50 billion portfolio into, they got to make multiple billions in appreciation, and these small cap stocks just aren't going to do it for them. Some of the stocks here we have here, I'd say I looked for companies that were around $10 billion in average. And in the next couple of videos, we're going to go over how I identified these and how I identified that they were selling for less than they were worth. And that was the key to doing this. I'm not sure if you can see this, it might be blurry. But essentially, the key to getting an above market return was seeing the things here that were on sale. And so we're going to go over some of those tickers for you. I'll go ahead and let you know that a lot of them were around $5 to $10 billion in value. And I will also submit to you in this video that small cap stocks give you a disproportionate reward for picking the undervalued ones correctly. And the reason for that is it's hard for Disney, that is valued at $100 billion, to go to, or $200 billion roughly, to go to $400 billion. But it's significantly less big of a deal for a company that's currently valued at $5 billion to go to $10 billion. And so the volatility here is a bug, not a feature. Essentially, it gives you the chance to find deals. When these growth stocks have challenges, or when investors lose confidence for whatever reason, it could be macro factors, could be a number of other things, could be competitors. There are a number of threats that these small guys face that you have to learn how to evaluate. But the rewards here are gigantic compared to the rewards here. So I'll kind of leave it off there. That's an intro to the strategy at Becker Capital. If you're interested in learning more, please subscribe and give me a like and a follow, and I'd really appreciate that. Also, if you're interested in, right now we have a wait list for our next fund, but if you're interested in opening an SMA, separately managed account, until that time, to kind of test the waters, we'll be happy to get that rolling if you just reach out to us at our email. That'll be linked in the description. Thank you so much. This has been Jacob Becker from Becker Capital. Appreciate your time.